Welcome to Under 30 on Schwab Network. We are discussing the moves recently in the airline space, especially as a new year kicks off. So joining me now to discuss some of the upside, frankly, we saw really to end a banner 2024 is George Tillis, senior markets correspondent for the network. So George, I mean, this has been one of the objective, clear winners of the post-election hype cycle. I will say that there's still some concerns, but as far as all things like guidance and commentary from a lot of these CEOs, it seems like we are full speed ahead into the new year. Looking at American, though, specifically, because that one has underperformed, of course, the Uniteds, the Deltas. I'm curious your thoughts when it comes to American Airlines. We talk about their debt load. We talk about the way they're trying to win back a consumer that has now remained pretty unhappy for quite some time.
Yeah, I mean, if you look at American and actually all the airlines, they've actually significantly performed or outperformed the markets, particularly movements since late summer of 2024. And that's attributed to, travel trends, but also lower jet fuel prices. And as a group, or as a whole, this whole industry has a lot of pricing power. So ticket prices have been actually increasing significantly. Travel demand has been rather robust, and the stock prices as of late have reflected it. Now, if you look at, American, even though over the last year the stock is up about 20%, most of that move has occurred over the past 6 months or so, particularly since, like I said, late summer. But if you look at the last 5 years, the stock is still trading, ironically, lower than where it was back in 2019. And American itself is an interesting one because it is one of the larger players and legacy players that serves both the domestic markets but also the international travel. So it's one of the legacy three airlines, Delta, American, and United being of that group. And some of the analysts on American right now are still very constructively bullish, irrespective of the move we've actually seen as of the last 6 months. Jefferies continues to see upscale movements in total revenue per available seat mile going into 2025, and they increased their rating on the stock to a buy from hold with a $20 target versus the $12 previous target that they actually had before. They see that next year, with the earnings estimates that they pin at around $2.55, higher than about the average consensus by about 14%. They see an additional $1.5 billion in revenue per available seat mile based upon high bookings rates, high travel demand, but also higher prices for the product, which is obviously airfares. The other thing they're looking at for American is an increase by about $1.5 billion into 2030 based on affiliate programs. A lot of people forget about the credit card partnerships and affiliate programs that these major airlines have with credit card partners. And that's also another catalyst into the next remaining portion of the decade into 2030, as alluded to by Jefferies, as a major catalyst for top line sales.
Yeah, and I think that's such a good point because I feel like every note I covered on analyst coverage regarding the airlines, at least towards the end of 24, it was all about these various credit cards and some of the upside that they see there. Yeah. So I think that was very much echoed by the street. And so when you look at American, of course, it hasn't seen the same blistering move to the upside as United over the last year, which was up 144%. But I also then have to look at Southwest and say, I know it's not really considered one of the largest, but it has also had so many company missteps that I think could speak to some of that underperformance. But even outside of their own managerial missteps, they also have a sizable exposure. I mean, I'd argue the most to Boeing. And I did see the news that they are right now selling back 36 jets in the sale leaseback program. I'm curious your thoughts there. If that is still a headwind for this company into the new year, because it cannot rid, unfortunately, that negative really overhang that is Boeing.
Yeah, so interesting enough, I mean, all the airlines are very unique, even though they operate in a very similar industry group. And I'll just backtrack real quick. If you look at performance of both American and Southwest, obviously American has more international presence, which is very profitable for the legacy airlines, where Southwest doesn't have as much international presence. Both the companies have not performed well over the last 5 years. But in the last year, these two laggard names are picking up traction for various reasons. But American really has a debt issue. They've got about $39 billion in debt relative to about $11 billion in equity. So their debt level's high. Where if you look at Southwest, their debt levels are not very pronounced, but they have more of an operational issue going on with their business. So it's very unique to them. Now, some of the things that they have problems with, obviously, is the certification problems with the Boeing 737 MAX, which Southwest has a lot of exposure to. Southwest obviously has some lingering effects from those technical software glitches they had, and they've had a lot of problems in the last couple of years. To which point, they've invested significantly in capital investment. That's also cut into the net income of the business relative to where they were just 5 years ago. And I think if you look at Southwest as well, they haven't participated as much in a lot of the demand for international travel. And so with the strong dollar, some of the other legacy players that have international exposure are getting a boom because it's cheaper to travel internationally because of the strong dollar, where Southwest really hasn't participated in that regard. So I think Southwest is a unique, franchise, obviously, from a domestic route standpoint, but they have faced some operational and executional strategy issues as of the last few years. But going forward, if they can resolve some of these issues, they don't have a really big debt overhang to contend with like American. So, if they can demonstrate some improving operational margins going forward in the next year, this is a stock that may end up playing catch up, not necessarily to the extent of the performers like United or Delta, which in and of themselves don't have debt issues like United, like American, or operational margin issues like Southwest. But Southwest, again, may end up being an interesting name going into 2025, considering it's been laggard, and also considering, Elliott Management, which is a very large institutional investor, has taken a significant stake in Southwest.
Yeah, and I think a good point there, and I think a good distinction between the two, because even though they're both underperforming, they both somewhat have their own very, I'd say, company-specific reasons why. And last thoughts here, right. I'm curious what you think about the jet fuel prices and the relationship with crude oil, because I do think crude oil, after a relatively quiet 2024, could be very interesting, especially with the new administration. Yep. And right now, you mentioned the dollar. I mean, I think that all of this has become more and more important, again, as there does still remain a lot of unknowns about crude oil and some of its volatility into 25 now.
Yeah. So, I mean, ideally speaking, if we do push towards export of not only crude oil, which the United States is now an exporter of crude oil, but also refined products that actually may create, elevated prices in diesel fuel, which again, jet fuel is a derivative of diesel fuel or heating oil. So that's something to go into, keep in mind going forward. And again, if we do see, higher crude oil prices, that could manifest into less performance and margins for the airlines going forward as well. And perhaps even the U.S. dollar, if the U.S. dollar starts to come in a little bit, and one could say that at least on an intermediate basis, the dollar looks extended, relative to major currencies like the yen or the euro, that may end up slowing down some of the international travel, to which maybe some of the legacy carriers like United and Delta may underperform perhaps some of the domestic carriers, which may benefit just because of the extension in domestic travel going forward.
Yeah, and I have to say, I've thought now for years we'd see a slowdown in international travel, because I frankly don't know how. It seems like everyone I know is oftentimes doing it, but that has remained to be strong. It's amazing. I mean, we talk about the strength of the U.S. consumer. It is, I think, no more further evidence than it is in the airlines and the tourism stocks, which continue to surprise even myself to the upside. But great insight on the airlines. Of course, we have earnings coming out with Delta tomorrow, United then in the coming weeks, as well as an American and Southwest. So lots to look forward to in the airline space. Appreciate it. George Tillis, Senior Markets Correspondent for the network. And thank you so much for joining us today for Under 30.